Welcome, my friends. The news today is that two regional banks are at risk of being booted from the S&P 500. The stock sell-off that hit regional banks this year has exposed lenders including Zions and Comerica to the risk of being delisted from the S&P 500 index. The banks, each with market capitalizations of around $5 billion, were the fourth and sixth smallest members of the 500 company listing as of this week, according to FactSet. That leaves the companies in a similar position to Lincoln National, which got shunted from the S&P 500 last month and placed into a small-cap index. Fitch Ratings cut its assessment of the banking industry's health in June, a move that analyst Chris Wolf said went largely unnoticed because it didn't trigger downgrades on banks. If you follow this channel, you know that Moody's Analytics has already cut ratings of 10 U.S. banks and puts some big names on downgrade watch. Among the smaller lenders receiving an official ratings downgrade were M&T Bank, Pinnacle Financial, Bouquet Financial, and Webster Financial. Major lenders Bank of New York Mellon, U.S. Bancorp, State Street, Truist Financial, Cullen, Frost Bankers, and Northern Trust are now under review for a potential downgrade. Banking turmoil is taking another step up. As you probably recall, a number of banks have failed so far in 2023. Silicon Valley Bank, Signature Bank, First Republic Bank, Silvergate Bank voluntarily shut down and went out of business, and Pacific West Bancorp was forced to merge with Banc of California just last week. What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. The stock sell-off that hit regional banks this year has exposed lenders including Zions and Comerica to the risk of being delisted from the Standard & Poor's 500 index. The banks, each with market capitalizations of around $5 billion, were the fourth and sixth smallest members of the 500 company listing as of this week, according to FactSet. That leaves the companies in a similar position to Lincoln National, which got shunted from the S&P 500 last month and placed into a small-cap index. Blackstone, the world's largest alternative asset manager, took Lincoln National's spot. This year's regional banking crisis has already caused changes in the composition of the S&P 500, the most popular broad measure of large American companies in the investing world. Silicon Valley Bank and First Republic were removed from the benchmark after deposit runs led to their government seizure. More changes may be coming, especially if the industry faces a protracted slump, according to analysts. It's absolutely a risk, Chris Marinac, research director at Janney Montgomery Scott, said in an interview. If the market were to further change the valuation of these companies, especially if we have higher rates, I wouldn't rule it out. Banks begin disclosing third-quarter results Friday, led by JPMorgan Chase. Investors are keen to hear how rising interest rates affected bond holdings and deposits in the period. Companies that no longer qualify as large-cap stocks are at heightened risk of demotion from the S&P 500. There were 7 members valued at $6 billion or less at the end of August. 2 of them were removed the following month: insurer Lincoln National and consumer firm Newell Brands. Those that join the benchmark often celebrate the milestone. The popularity of mutual funds and ETFs based on the index means that new members typically see an immediate boost to their stock price. Those that get demoted can suffer declines as fewer money managers need to own shares in the companies. So what are the S&P guidelines? To be considered for inclusion in the S&P 500, companies need to have a market capitalization of at least $14.5 billion and meet profitability and trading standards. Members that violate one or more of the eligibility criteria for the S&P Composite 1500 may be deleted from the respective component index at the index committee's discretion, according to S&P Dow Jones Indices methodology. Still, that doesn't mean Zions or Comerica are on the cusp of a delisting. The committee that decides the composition of the S&P 500 looks to minimize churn and accurately represent reference sectors, making changes only when ongoing conditions warrant an index change. According to S&P, For those of you not familiar, Zions Bank Corporation is a group of financial services companies that operates more than 450 full-service banking offices and more than 500 automated teller machines in 11 western states of the United States, including Arizona, California, Colorado, Idaho, Nevada, New Mexico, Oregon, Texas, Utah, Washington, and Wyoming. The company has total assets exceeding $90 billion. Zions Bank Corporation is currently included in the S&P 500 and NASDAQ Financial 100 indices. It is also a consistent recipient of national and statewide customer survey awards in small and middle market banking. Zions Bank Corporation is a national bank that operates under local management teams and distinct brands such as Zions Bank, Amegy Bank of Texas, California Bank and Trust, National Bank of Arizona, Nevada State Bank, Vectra Bank Colorado, and the Commerce Bank of Washington III. Comerica Incorporated is a financial services company headquartered in Dallas, Texas. It is the parent company of Comerica Bank, which has more than 400 branches in the United States, including Texas, Michigan, California, Florida, and Arizona. The company is divided into 3 business segments: the business bank, the retail bank, and wealth management. Comerica focuses on building relationships with its customers and helping them achieve their financial goals. They offer a wide range of personal finance services, such as checking and savings accounts, web and mobile banking, and credit cards. The S&P 500 is a stock market index that measures the performance of 500 large companies listed on stock exchanges in the United States. It is widely regarded as a benchmark for the overall health of the U.S. stock market. Companies that are included in the S&P 500 are typically large, well-established, and financially stable. Being included in the S&P 500 can increase a company's visibility and credibility among investors, which can lead to increased demand for its shares. This can result in higher stock prices and greater liquidity for the company's shares. Additionally, inclusion in the S&P 500 can make it easier for a company to raise capital by issuing new shares of stock. However, being excluded from the S&P 500 can have negative consequences for a company's stock price and liquidity. But what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.